first to the growing financial crisis engulfing Europe and threatening the rest of the world. This week we've seen Ireland's credit rating cut to junk status like Greece's, and there are fears the larger economies of Italy and Spain will need bailouts. Investor and consumer confidence is falling here in Australia and abroad as markets watch for signs of contagion. Adding to these woes is Barack Obama's anxious bid to strike a deal with Republicans to avoid America defaulting on its debts. Greg Hoy investigates how bad things could get.
Sovereign debt, the deteriorating condition plaguing the economies of Greece, Portugal, Ireland, Italy and Spain. The prospect of debt default and economic contagion preoccupying each waking hour of European finance ministers.
The current stage of the crisis is a severely intertwined combination of the sovereign debt crisis and banking sector fragilities.
And add to Europe's fear the fact that the US must raise its $14.3 trillion debt ceiling by August 2nd or risk a default of its own.
If they let the US actually go into default, it blows up the world. And that really is a greater worry to me, what happens between now and the middle of August in the US.
Little wonder the unfolding debt crisis is keeping economists and financial analysts at home and abroad on the edge of their seats.
It's hard to be optimistic because the European approach is to try and muddle this through to 2013 when the European Financial Stability Fund will be in place. The biggest problem we've seen emerge this week is that the Italian and Spanish economies are now coming under question, their government's financial positions coming under question, and of course, while it was contained to Ireland, Portugal and Greece, it was regarded as container bull.
The European developments, of course, could end up in two different states of the world. The first state would be that potentially it flows through to the rest of the global financial system and has some pretty big ramifications for the world, something that looked a little bit like the global financial crisis a couple of years ago.
Italy and Spain are Europe's third and fourth biggest economies, so the possibility they may also require financial assistance has heightened anxiety on global markets. But at a gathering of 150 Australian and international economists in Canberra today, views were strongly divided as to how bad the euro crisis has become.
I think we should be concerned. What we're seeing in the Italian case in particular is a real increase in the cost of borrowings that accelerates Italy's problems. We're likely to see a restructuring in Greece and possibly Portugal sometime in 2012. And the real issue are knock-on effects on European bank balance sheets and on risk spreads generally in capital markets.
There doesn't seem to be the prospect of a foreign crisis in Italian debt. So if anybody has to stabilise the problem, they do. But Silvio Berlusconi is acting to introduce a modest austerity package, and it looks like passing the lower house in the next week.
I'm still an optimist on it. I think that they will find a way of ending the situation in an orderly fashion so that we don't end up with a global financial type crisis event. But nonetheless, there is, of course, a tail risk that it doesn't end that way.
Of the troubled euro nations, Greece has the heaviest debt at more than 124% of GDP. Not far behind is Italy, whose debts are around 30% higher than the other euro nations at risk of default. But to some, a bigger worry is the $14 trillion debt burden of America, now around 98% of GDP, according to the IMF, as politicians haggle over spending cuts and whether to raise the sovereign debt limit in the next few weeks. And economists debate what will happen if America doesn't.
I'm actually more concerned about that than I am in Europe, because in Europe there's been a political process in place for the last year to solve the problem.
Yes, agreement will be reached and the debt ceiling will be lifted. The tougher question is, what is the path for U.S. fiscal policy going forward? The U.S. is clearly on an unsustainable spending path.
But for all the worrying woes of the world, what is the most popular prognosis for the Australian economy?
Australia, of course, weathered the financial crisis very well, and its growth outlook looks very reasonable.
The big one will be whether or not it affects China and Asia, and if we start to see the Asian economy slow, then that's when it's front and centre for Australia. The good news is that so far it's looking like it's contained to Europe.
I think this is just another short-term shock in volatility, which will survive. Australians will still go to the beach and drink beer. So I think we'll get through this one again, Greg.
Greg Hoy reporting.